What's up, everyone? It's Scotty with MoneyVest. So Palantir having a very, very nice, strong rally on the day, up a little bit over 17, 18%. So we're going to talk a little bit about their earnings and exactly what they reported on the day here for the third quarter fiscal year 23 numbers. And of course, do a complete technical analysis on this company as well. So up almost 18%, trading as much as $17.58 here on the day as well. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos, members only benefits, including trading view charts, trading setups and ideas, and everything's going to be included, as well as the MoneyVest Pro platform and the early access in 2024. So links are going to be down below, and we'd love to have you on board. So this right here, Palantir shares popped 21% after its third quarter results beat. EPS came in at 7 cents per share, and this is by far the most important thing that's getting all Palantir shareholders very excited, is the turning the corner towards profitability. And revenue was $558 million, and that was up 17% on a year-over-year basis. And the company also reported a net income, profitable, a net income of $72 million or 3 cents per share, compared with a net loss of $124 million same time last year. They also mentioned that they expect to report between $599 to $603 million in revenues during the fourth quarter, and raised its revenue guidance for the full year between $2.2 and $2.22 billion for the entire year 2023 as well. And in the second quarter, Palantir said it expects $2.212 billion for the full year, above the midpoint of its forecast from May. So we're definitely seeing not only a guidance raise, beat on EPS, beat on revenue, and more importantly, turning the corner towards profitability as well. And the company also is known for its defense and intelligence work in the U.S. as well as overseas as well. And as unfortunate as it is, the war certainly is, and again, it's going to come across as pretty shallow, but the war does kind of benefit companies like Palantir because they do provide a lot of intelligence to a lot of these countries, including Israel, with a lot of the services, artificial intelligence and data intelligence related to all these different geopolitical tensions. Now, this right here is the acceleration in the commercial revenue. So 33% increase on a year-over-year basis, quarter over quarter up 13%, and U.S. commercial customer count up 37% and 12% on a quarter over quarter basis. Total contract value increasing to over $252 million, and 55% increase year over year on a dollar-weighted duration basis. 102 U.S. commercial deals closed in the third quarter, and this right here is the most important piece, with a $71 million profit on a GAAP basis is pretty phenomenal if you think about it for Palantir. It's gone from like 30 million, 16.8 million, 28 million to now finally achieving significant amount of profitability, and it is turning the corner once and for all. We are seeing very nice execution in play. Neo, take notes. This is how it's done. This is how companies need to turn the corner towards profitability. In other words, execution and being self-sustaining business model is very, very important for any company out there. This right here, U.S. commercial revenue growth, 33% to $116 million, and government revenue growth was up 10% to just over $229 million. And again, these are the highlights. We have already gone over them, so we don't have to go over them again. And the balance sheet continues to be very, very strong, with adjusted free cash flows coming in about $141 million and a 25% margin, and cash flow from operations sitting at $133 million in the third quarter with a 24% margin as well. So what I'm going to do is I'm going to account for that 25% cash flow margin, and we know that the guidance is $2.2 billion. So we're going to take into account, let's just do here, $550 million in free cash flow for the company. So we're going to arrive at our DCF model. I'm going to plug in Palantir, and I'm going to put in $550 million in free cash flow. And what you'll notice is that automatically, obviously, on a discounted cash flow model, the model does suggest that the stock is still very, very overvalued. Now, in terms of today's valuations at $17.50, if you grow the free cash flows by 50%, even then the valuation model does spit out a bit of an overvaluation here. 60% and we are undervalued. So let's just do 55, and let's just do 57. Let's just do 56. I think is going to be that number. There we go. So 56% is the cash flow growth required for Palantir to basically make sense of today's valuation, because as the company's turning the corner towards profitability, as I said, and they are now generating income and cash flows, these numbers are still relatively small. Because if you come back to the presentation, what you'll notice is that this right here, margin wise, is still pretty low, right? This company certainly can do a lot better in terms of net margins, right? Because $71.5 million in GAAP net income, which is off of $558 million. So what is that margin-wise? We're looking at a margin of about 12.7%. And do you really believe that for a software company, for a data science company, 12.5%, is this going to be it? No, of course there's going to be margin expansion over time as the operating leverage kicks in for Palantir. So even if we safely assume that, let's say the company is going to be able to do 30% margins over the long term, and let's just account for earnings this time and not cash flows. So 2.2 billion times 0.3, we're looking at $660 million in net income for the company, right? So if we account for the actual Palantir's net income discounted earnings multiple model, and we're looking at 660 million, and then we grow the actual earnings by, let's say, 30%, and we give it a 30 times PE multiple, then we are looking at exactly the same level that we're trading at the moment. So in other words, this is going to be that sensitivity grid. And if we believe that Palantir can grow at 30% earnings, right? So this is bottom line earnings, net income by 30%, and get a 30 times P multiple and get a 30% net income margin, then the intrinsic value is going to be at closer to $17.47. Now, this is all math, right? I mean, I'm not making this stuff up. It's kind of always interesting, comments down below sometimes disagreeing or saying, oh, the numbers don't make sense. The numbers put the fair value to be too low. That's just crazy. I mean, it is math. I mean, we can't, at the end of the day, we can't argue math. I mean, yes, I can make the numbers look whatever I want. I can make Palantir look undervalued right now if I go with a 50% growth rate, right? And now it's undervalued by 100%, right? So, but again, the question is that probable, right? We have to go with the most realistic, most probable scenario for each stock, and then try to figure out, okay, how likely it is to hit those numbers. As you guys know, that I would be a lot more comfortable with some of the more reasonable numbers here. I'd say 20% or 25 times P multiple. It's going to be sub $10 for Palantir. This is not even accounting for any share dilution, by the way. And we know Palantir is kind of like the king of dilution, or at least it has been in the past. So even if you do account for, let's say, 2% dilution, now the fair value jumps down basically to sub $9. If you go with 25% growth and a 25 times P multiple, we're going to be sitting at just under $11 for the actual intrinsic value. So it really depends, on what your expectations are for growth and for multiples. If Palantir is indeed going to expand pretty rapidly, but even revenue right now is not growing super fast. I mean, we did grow 17%. Don't get me wrong, it's a pretty good growth rate, but margins need to expand for the business in order to justify today's valuation at almost $38 billion. Because even right now at $38 billion, if you do $2.2 billion in revenue this year, 30 divided by 2.2, we're looking at a 17 times sales multiple, right? And 2.2 times 0.13, or let's just do 0.15 because 15% margin. We're looking at $330 million. So that's 338 divided by, 0.33. We're looking at 115 times earnings, right? So right now, Palantir trades at about 115 times earnings and about a 17 times sales multiple. So yes, this is a phenomenal, increase on the day, 18%. That's incredible, no doubt about it. But we have to really understand that, okay, what's the future like for Palantir? And it's still very promising business, right? Becoming profitable, growing cash flows, growing revenues. So no doubt about that. But the real question, again, is going to be the valuation, right? What's the appropriate valuation and the intrinsic value for this business? So this right here is going to be the entire technicals, where we have obviously traded in this head and shoulders, but we never really broke down below the neckline. We got up to that resistance of $18, then sold right back down from those levels, down about 22-23%, and then we had a very nice gap up, and right now we're kind of struggling at that resistance right now for Palantir at $18, and that support level is going to stay put at $13.75 for this company. So hope you guys enjoyed this video and a complete update on Palantir. Let me know your thoughts down in the comment section below if you're if what do you think about Palantir, right? What's the intrinsic value according to you? And as always, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. And as always, happy investing. I'll see you all in the next video.